Hello and welcome to Stocks Advisory channel. Here at our channel we are looking for interesting buy opportunities for US-based stocks. In today's episode we will talk about CHWY Incorporated, traded at New York Stock Exchange, ticker name CHWY. Well, CHWY is a company that now is showing very interesting pattern actually after having a long-term from mid-February decline sequence that was showing in terms of a correction channel that can be drawn here. What we see now is actually in fact that this channel was broken, and it's very interesting that after being broken and having a small reconfirmation here around beginning of June, we are growing now and now sitting at just below moving average 200. So if we look here in magnification, we can see this. So we had red-white combination, but after hours it's little bit still reddish. So the question is, will it continue growing or what might happen? Well, in general, what we observe here is actually the possibility to change the trend. So the possibility that after having this decline, we are now actually about to grow. But the current wave that started here recently from actually mid of May, actually the breakage wave and final breakage of the downwards trend that took place by beginning of June, now might correct itself and slide down a little bit towards this descending dark channel. And this will be exactly the nice moment where we can safely buy if the price goes there, especially given that we are close to end of trading week. So I don't think there will be much excitement in trading. So what does it mean? It means that actually the very first level where we can start buying through would be here. It will be between 70 and 74.31. So we can write it here for ourselves as a call out. Actually very nice level. So 70 and 73.45 was it, I think. Sorry, 74.31. So let's write it like this. And this is our so-called primary level. So the level from where we expect to have initial rebounds and continuation of the further growth. And if this is going to happen, actually, the next price target will be somewhere here in the vicinity of let's say of about 82, which will allow us to make at least 10 to 15%, and that would be our profit note here. So let's write it down. So profit taking is advised here from 10 to 15%, and once you can do it, really do it, because if you wait too long, the position might expire, and instead of making profit, you could go to having losses. And with this being said, of other parameters that still indicate this indeed to take place is the fact that volume is increasing, so the people know that soon the trend might indeed change, so people start. MACD histogram is showing finishing of upwards wave. It can make secondary wave, which would mean immediate bounce, but most probably this wave will slightly decline, and then we will actually prepare to make a secondary wave, which would mean we first need to go down to the first level here between 70 and 74, and then actually start growing further. RSI level is growing stably, but before going indeed again to overbought, it might make some volatilities here, similar to one we saw by November-December action. So this kind of zigzagging might take place before we really go higher, and this also would mean that we should actually go to the first level. So this is the first level. If the first primary level is declined, it still might be going lower, because what could be happening, instead of immediate breakage of the declining trend and going to upwards, we could have a parallel sliding. The situation when this descending channel will just go in parallel here at a little bit higher level. If this is going to happen, well, it's also no problem, secondary technical pattern that might take place, but then we just need to be ready to buy the lower principal levels, and these would be just here, the one formed by November and also by the price action in September, and this would be between actually 55.77 and 61.36. So we can write it for ourselves as a second note, and this would be the secondary technical level where we can buy again. So let's write it down: 55.77 and 61.36. So this is the second level, also called secondary technical level from where we again expect the rebounds and again making profit from 10 to 50% from overall money allocated in the position. And as always, what we do at our channel, we look at the most critical situation when we have a negative catalyst kicking in. A negative catalyst means that it could be a news related to a company, could be coming in the form of global news, sector news, or whatsoever, some negativity. It's not anticipated, but if it is coming, we need to be prepared for this and we need to be able to buy the lower level. So this way of mitigation means that we just need to keep some funds to buy lower. And if you look here, these are actually the levels where we can expect this decline. So we just need to keep some funds to buy there, which will be between around 40 and 45.08. So neglecting cents, we can say between 40 and 45. Let's write it here. And this would be, although quite low, the so-called negative catalyst risk mitigation. And because these levels are far from each other, we need to be buying through such a way that whenever we enter to the channel or to the level, our average down price is very close to that level. So at the rebounds, we take the most profit. We need to buy non-linearly, and it means that here it would be advised to play with so-called 5 portions. What does it mean? It means that money you would like to play here, you can split in 5 portions, then you can buy with 1 portion through the first level. If the primary technical level is not confirmed and we are going to the second one, you can buy with another 2 portions through the second level between 55.77 and 61.36. And then if we have any negative catalyst, kind of a doomsday scenario, price dumps down, everyone will be exiting with losses. You just buy calmly with the remaining 2 portions. And then you can rebound and make the profit at 50%, actually even more if we go to the lower levels. This way, as you see, we don't talk about stop loss, cut loss, so we don't want to exit with negative, let's say, profit, but negative saldo, but we want to exit with positive. Therefore, we are okay to spend a little bit longer time. That's why we do non-linear averaging down and buying through with time and keeping some funds to buy at the lower levels. So although it sounds a bit contradicting, but with this way of trading, if the situation goes worse once you enter, it's even better because okay, you will spend a little bit more time, but you will be able to buy more stocks with cheaper price and eventually actually exit at even bigger profit. So this way of trading is aiming to mitigate risks versus profit, also including unseen or let's say unanticipated risks of negative catalysts. If you like this way of trading, this way of averaging down the risk mitigation, don't forget to subscribe to our channel, press the bell button. This way you will not miss our new videos, new interesting discussions for US-based stocks. And with this being said, this is all for CHWY Incorporated. Good luck with it and see you at another episode of Stocks Advisor channel.